Yeah, hi, I'm Luke Alexander, President and CEO of Newcore Gold. Newcore is listed on the TSX and OTCQX. We've got an advanced stage exploration project in Ghana, district scale exploration asset, 216 square kilometers, underpinned by a very robust PEA, which we put out in the middle of 2021, as well as a 1.4 million ounce resource.
Okay, but here's the thing. No one cares. Right? Because last time we spoke, 56 cents, now down at 25 cents, 34 million market cap. The market has gone quiet. Why do you think that is? You gave me a list of things that I should be impressed by, but they're not.
I think at the end of the day, we're seeing blood across the entire market. I mean, we've seen the major sell-off. We've seen all companies within the commodity space, for the most part, selling off. We've had perpetual disappointment from some of the seniors from the CapEx perspective, from an OpEx perspective. I mean, you look at the earnings that Newmont put out, you look at the CapEx blowouts that we've seen at companies like Gold and Argonaut. That I think has had a major impact on investor sentiment and confidence for the sector. And as a result, we've seen a major sell-off in the sector. And inevitably, in that kind of an environment, the juniors typically take it on the chin worse. So we've been caught up in that sell-off, but fundamentally, we've kind of been delivering on everything that we ultimately said we'd deliver on with our drill campaign, as well as moving the market forward. And we've gotten to a valuation today that we haven't seen in the last 2 years, which I think is a huge buying opportunity for investors. And we recently completed a financing, and myself, along with a number of members of the team, participated in that financing because we see the fundamental value that's been created.
Okay, you put in, tell me this. How much money have you invested in the company? So how much money has been invested in the company since it started up?
Well, so we relaunched the company in 2020, a little over 2 years ago.
Right.
That's when I joined as CEO. Our chairman, Doug Forrester, stepped up as chairman and really relaunched the company. We've raised $34.5 million since that point. The bulk of that capital was raised with institutional investors. These are deep-pocketed investors focused on the mining and precious metal sector. We took the institutional ownership from 0 to about 40% today. So $34.5 million. And that's, again, one of the things that I think is quite attractive from a valuation perspective for incoming investors or for existing investors who are looking to increase their position, is they're effectively buying the company today at a valuation which is the cash that's effectively been put into the company over the last 2 years.
Right, but the money's been spent, right? So you've raised $5 million recently in a book deal. You've got some in the region of $6.5 million to go and do whatever you need to do. We'll talk about it in a second. But it says that people don't value the way that you spent those dollars effectively, right? Because you're sitting there with a 1.4 million ounce inferred resource. I guess you've just finished your 90,000 meter drill campaign that we've talked about on numerous occasions. What are you going to be able to add to that 1.4 million ounces, do you think? Because it's going to need something big to get people to notice you.
Yeah, in terms of the updated resource that we're planning on for Q4 of this year, if you look at the 1.4 million ounces, the meters that feeds that are about 110,000 meters of drilling. If you look at our 90,000 meter drill program, 20,000 of that was included in the 1.4 million ounces. And of the remaining 70,000 meters, about 45,000 meters we view as direct resource expansion. The other 25,000, we've made 3 new discoveries on our project, but we don't have enough drill density to move those into the resource category at this stage. We've also made multiple high-grade discoveries on the project. So all of that adds fundamental value for the project, but won't necessarily get captured in an updated resource. So when you look at the 45,000 that we think will directly get captured, that's about 40% of the 110,000 meters. So we think we'll start to get to 2 million ounces with the updated resource that we put out. And the reason I kind of take that long-winded way of saying 2 million ounces is I like to fundamentally kind of break down the back of the envelope calculation that gets you to that 2 million ounces. But again, 2 million ounces plus 3 new discoveries, which highlight significant resource growth potential above that 2 million, as well as for the first time, we think we'll be able to potentially put out an underground resource, which highlights some of that high grade that we've been finding on our project, which is quite an interesting element as well.
Right, but that comes at a cost, and what I'm trying to do is really, kind of not here to hear a story. What I'm here to try and do is try and value your company, because it feels cheap, right? It feels super, super cheap. But I'm wondering why people are discounting. Is it because it's just another West African story with, just over 1 million ounces of kind of, typical grades for the region? You're sort of sitting between one and two grams per ton. And there's enough of those stories going around. Or is there something else that we're missing here? Do people not believe that you can actually get this thing through into production?
I think in terms of, the exploration space in general, find a stock that has performed in this market over the last 6 or 12 months. Across the board, stocks have been hit incredibly hard. And I think now, value investors will start to show up and ultimately see the opportunity to step in and start to buy companies with strong fundamentals. And I would put Newcore at the front of the pack from that perspective. I mean, today we're currently trading at about $15 EV per ounce in the ground. If you look at the PEA that we put out in Q2 of 2021, we've got at a $1,650 gold price an after-tax NPV of $212 million. That essentially, has us today trading at about 0.12 times the NPV of the project. So again, we're getting to valuations today where value investors will start to step in. The other interesting thing, and this is more of a kind of high level view from my perspective, is with these huge CapEx blowouts that we've seen with companies around the world with these big hard rock projects, I'll be interested to see if in the next couple of years we start to see the mid caps and majors refocusing on heap leach projects. That's the project that we've got in Ghana. It's a heap leach, low capex project. If you look at the capex for our project, you're looking at about 100,000 ounces to produce roughly 94,000 ounces of gold over a 10.5-year mine life. You look at the capital intensity of that relative to these hard rock projects where you're talking $250-300 million, which have blown out to $500 million for 150 to 200,000 ounces of production. Much more complex projects, which we've inevitably seen major capex blowouts on. So I actually like where we're positioned in terms of a low capex heap leach project that today is fundamentally undervalued. Is a great position to be in.
That's a really interesting thought. This is why I'm slightly discounting your conversation and where you're trying to get the conversation into the high grade underground, because the capex environment at the moment, the environment for raising capital for those sorts of projects seems quite difficult at the moment. And here's the kind of dichotomy. It's like, unless you can show this super high grade and there's a lot of it underground, it's tough. They say these blowouts are happening across the board. But likewise, open pit heap leach is not liked in a lot of jurisdictions. Why is Ghana any different? Why are they going to be more receptive?
I mean, if you look at Ghana, the gold sector is incredibly important for the country as a whole. It creates a huge amount of jobs. It creates tax revenue, royalty revenue. Every time I meet with the ministry or any of the senior officials in country, one of their first questions is, when are you bringing it into production? How can we help you get it into production? A good example that I've been recently referencing is, look at what Asante Gold has done. They sit on the Sefwi-Bibiani belt to the north of us. They bought the Bibiani project just about a year ago. Within 10 months, they brought that brownfield project back into production and are producing gold. Producing gold there today. They announced first gold pour in July of this year. If you look at that same project sitting in Canada or the US or Australia, I would lay a bet that would take you at least 5 to 7 years to bring that same project back into production. So this again is just a small example of how keen the government is to see the mining industry move forward, and ultimately all the benefits that come along with that.
Right, and there's a lot of companies in country at the moment. It's I guess comforting in a way, but it's also a lot of white noise that you're competing against. Certainly, Dan, where you're sitting at the moment. So why are you any better than literally hundreds of other gold companies in Ghana alone?
So Matt, I wouldn't say there are hundreds of others, and there aren't hundreds of other gold companies in Ghana, unless you were to take into account small scale artisanal mining, which I wouldn't kind of put into the same bucket. One of the real advantages we have is that if you look at Ghana as a whole, the bulk of the companies operating in country, especially the publicly listed companies, are major mining companies or mid-cap producing companies. You've got Newmont, you've got Anglo Gold, you've got Gold Fields, you've got Shandong, who recently came in country, Chifeng, you've got Asante. I mean, these are all producing companies in country. You've got a very limited number of advanced stage exploration companies. And I think that's another one of the big advantages that, Newcore's got is you've got, great operating companies in country. And we're one of the few investment opportunities for advanced stage exploration. We were able to amass this land package about 10 years ago. It's a very large land package situated on the Sefwi-Bibiani belt, which is one of two prolific gold belts that runs through the country. And you would be very hard pressed to put together this kind of a land package today. So again, yes, in West Africa, there's lots of exploration companies running around, but within Ghana, Newcore is one of the few opportunities for investors looking for publicly traded companies.
Right, and what's the game plan here? I know who's on the board, and I know the track record of the people who are on the board. But what's the game plan for you guys? Is it just a bridge too far to get into production yourselves?
So we raised $5 million in July of this year in an absolute terrible market. But, we looked at that capital raise and said, okay, 12% dilution. Yes, we don't like dilution, but ultimately giving us the ability to keep pushing the project forward is very important. That was supported by a new deep-pocketed institutional investor, as well as follow-on investment from a number of our large institutional investors who see what the value that we've created on the project. So we'll take that $5 million plus the cash that we had in the bank, so about $6.5 million, and we'll look to launch an additional drill campaign to build on the success that we've been having over the last couple of years from a drilling perspective. We're also in the process of doing a bunch of met work to follow up on some column tests that we did in 2021. So we'll get that out to the market. And then in Q4 of this year, as we've talked about a little bit, we'll look to ultimately get an updated resource out. And that's where I kind of talked about the, back of the envelope, 2 million ounces is what we're looking for, but also those new discoveries and some of the high grade that we found on the project. Once we've got that resource in hand, then we will look at potentially doing an updated PEA as well. Obviously, internally, we'll analyze, the benefits of an updated PEA and what the kind of size of the project would look like at potentially 2 million ounces, and decide whether it makes sense to put that out, or whether it makes sense to just keep drilling and growing the overall size of the resource. But again, one of the great things about a heap leach project with great infrastructure is we could turn around and build a 50,000 ounce a year producer, and that's something that Newcore at our size could ultimately fund. we're not building a project in northern BC where you've got to build a $50 million road and put in a $40 million power line and have a huge amount of infrastructure expense that ultimately needs to be offset against a 250,000 ounces of production to justify all of those infrastructure costs. Heap leach project with a road running right through the middle of our project, we could put 25 or 50,000 ounces of production, or put of heap leach production in place, and that's something that we could obviously fund and push forward. At the moment, that's not our focus, but having that flexibility again is one of the real advantages of this project.
So, tell me this, because again, I'm just going to cut through the noise here. Is you've got 40% institutional shareholding, right, on the register. You've got 24% management and insiders on this thing. For a company of your size, it just seems like too much. The balance isn't quite right. Why is that? Just a factor of the fact the share price has come off and balance is normally better than this, but right now it feels like an impediment to you in the sense that the kind of volatility that you need and the trading that you need just isn't there for you.
I mean, in terms of the volume that we trade for a small cap company, we trade good volume, and I think there's always opportunity for more volume, and that's something that we're very conscious of. Is that we've got to have volume in the stock to attract investors, but people who want to get into the name. You're not looking at, a 5% spread in the quote. There's always a very tight, penny, half penny spread in the quote. So that's important. And there's volume out there for people to get in and out of the stock. So, anyone who's interested in buying or selling the stock, we've worked very hard on making sure there's good volume in the name for retail investors. And our longer term institutional investors, yes, they're not trading on a daily basis, but when it comes time to ultimately supporting the company for additional drilling or other initiatives, then it's great to have that support. And I think the last financing that we just completed in an absolutely terrible market at the end of June, beginning of July, is a real testament to the ability for us to continue to push the project forward with the support of those institutional investors.
Right. So what's the plan from here? You got $6.5 million. Is it just as simple as get this new PEA out and see what the market does?
We're going to keep drilling, put out MET results, put the resource update in Q4 of this year.
Have you got enough money to do that though? With what you've got, you have. Okay.
Yeah. And then we're in the process of designing our next drill program at the moment, and obviously we're very focused on making sure that it's the best use of capital possible. So we're in the process of designing that, and we'll look to announce that we're kicking off drilling again on the project. So again, all of that, means that we're continuing to add value for shareholders. And, when the market comes back, I'd like to think that Newcore is one of the first ones out of the gate to ultimately re-rate, because we have continued to move the project forward. We have continued to invest in drilling and other work. Whereas, we're at the stage now where a lot of companies are effectively just looking to keep the lights on, and we'll do so for the next 6 or 12 months, but that doesn't really create value for shareholders, whereas we're actually able to create fundamental value with the capital that we've got today.